This week, we're talking livestock slaughter data, and we'll get into that cattle on feed report. Welcome to the weekly livestock market update on Brownfield. I'm your host, Megan Grebner. With us this week is University of Tennessee ag economist Charlie Martinez. Charlie, great to see you.
Good to see you too. And for the folks listening, if you hear anything, it's because I'm at Cattle Vision's headquarters in Missouri, and doors are open.
You are actually where we're based. Yep. You're in Missouri this week, and you're speaking this weekend with Fall Focus for Simmental Association?
Yes, ma'am.
So it's great, a great chance for folks in Missouri to see you in person this week if they have the opportunity. All right, we'll get to those reports coming up. But first, let's recap what happened this week in the markets.
Yeah, so live cattle prices closed at $241.95, which is down 6 weeks from last week, or 6 cents from last week. But then here's where we start seeing some rally. October live cattle futures closed at $237.87. Which is up $7.22 compared to last week. And then the September feeder cattle contract, or the September feeder futures for verbiage, closed at $362.67, which is up $15.32 compared to last week. Choice box beef was closed the week at $406.61, which is up $15.22 compared to last week. Select box beef closed at $381.46 at the end of the week, which is up $15.29 compared to last week. So the cattle side, we see a lot of big gains on the choice and select side of things. National base hog carcass price closed at $102.02 or $102.20, which is down 3% from last week. And then the nearby lean hog futures closed at $91.20, which is up $1.10 from last week.
We'll probably get more into what's going on cattle pricing in that section. I want to talk quickly about that box beef price. We hit a lull several weeks ago, and we've started to rally, and we keep pushing. We're over $400 at this point. Do we get concerned about what happens in terms of demand as we see those wholesale prices continue to push higher?
Yeah, I think when I guess basically over the last 2 months, we saw a peak and then, fall out, and now it's peaking again. And I think people are seeing what's happening on the last 2 quarters of retail demand where it's been so strong. And I think some of the hesitancy on the packer side and on the retail side was, we're pushing the limit. And I think when I see this, it signals to me that we have strong retail demand still holding. And from a market standpoint, the market's reflecting that in the prices by rallying again as we start the fall side of things, and as we start getting into another season in the fall side of the calendar year with football and sports side occurring again.
All right, let's get into the slaughter numbers. I think there's interesting cases. We're talking about these as well, specifically looking at what's going on in cattle slaughter.
Yeah, so cattle slaughter for the week was at 547,000, up 17,000 head compared to last week. Down approximately 61,984 compared to last year. And then year-to-date, cattle slaughter is down 6.9% compared to last year, which I think is kind of the market's at work. When you see tighter supplies, prices go up. And I think that's what we're also seeing and reflecting in the choice and select prices that we just talked about. On the hog side of things, hog slaughter for the week was at 2.41 million head, which is up 11,000 head compared to last week, and down approximately 88,400 compared to last year. And then when you compare year to date, hog slaughter is down approximately 2.4. So when I see these numbers of 6.9 year to date down on the cattle side and 2.4% down on the hog side, I think throughout this year, it's been hovering around 6% and 2%, and now we're starting to see those numbers creep. And I think on the cattle side, that's reflective of the tight supply is really starting to show itself as we start working our way to the second half of the year.
And we'll get into the cattle supplies in just a bit. We're going to start with livestock slaughter. I'm going to switch you up from what we talked about ahead of time, because I want to talk beef cow slaughter too before we get into cattle on feed numbers, as we're talking about all of that information. So as you look at livestock slaughter and in this report, talk to me a little bit about some of the things that you're seeing in those numbers.
Yeah, so the slaughter report that came out from the get go, we see commercial red meat production for the U.S. total 4.36 billion pounds in July, which is down 4% from 4.55 billion that was produced at the same time or July of 2024. So we're starting to see a tighter supply of total red meat production. On the beef side of things, beef production was at 2.18 billion pounds, which was 4% below last year. And then cattle slaughter totaled 2.54 million head, down 7% from a year ago. So, we just talked about 6.9% being down week over or year to date change. And we saw a similar, year over year change in the month of July on the beef side of things. But the one thing that really stuck out to me was if we know we got tighter supplies, how do you compensate that? Well, you compensate that with bigger weights. And the average live weight was up 30 pounds compared to the previous year at 1,410 pounds, on the beef side of things. And, that's an average between your steer and heifer. Your steers are going to be, a little bit heavier on the hanging side compared to heifers. And the same thing is true with live weight. But for us, we see this. If you pay attention to national capacity for cattle on feed and national capacity for packers and their capacity utilization, everyone's down across the board. So the one way that you can offset that is with bigger weights, and that's what we're seeing in the markets. The last one that really stuck out to me, of course, was the pork production numbers. Pork production totaled 2.16 billion pounds in the month of July, which is down 4% from the previous year. Hog slaughter totaled 10.4 million head, again, down 4% from July of 2024. And then the average live weight was down 1 pound from the previous year at 282 pounds. So I think on the hog side of things, we have fewer numbers, relatively speaking. We're still only down around 2.4% compared to last year in terms of total slaughter. So, you're not going to be expecting to see the offset on those hogs in terms of weight. But from a retrospect way of thinking, is relatively unchanged. 1 pound at 282 pounds is just keeping supply steady on the weight side of things. But of course, terms of total number of head being slaughtered is the difference that we're seeing.
How much are we also continuing to watch what's going on with beef cow slaughter in relation to whether that's a sign that maybe we're holding steady or thinking about growing, and also then thinking about ground beef production, because we're not bringing in cattle from Mexico either still.
Yeah. So I think Josh did a good job of writing about it a couple of weeks ago. I think it might have been last week in Southern Ag Today, kind of talking about the cull cow market and what's the impact now for ground beef versus the future, and the price signaling of if prices for cull cows are at all-time highs, tight supplies of cull cows are occurring. We know we generate a lot of ground beef with those animals, and right now we're tight on those. And so when it comes to ground beef, we still have some supply that's out there from imports from Brazil that was still on boats that were coming in before the deadline for the tariff, imposed tariffs. But I think when we start talking about the whole cattle industry as a whole, when we had the July 1 report, Kenny and I were talking about the rebuild might happen more with some cows and via not culling as much, keeping those cows, might keep a replacement with them or not, but prices were kind of the deciding factor. I think when it comes to ground beef, especially on the retail side of things, prices seem to be a little bit more inelastic this go around compared to the last cattle cycle turn that we had 10 years ago. And right now, supply is becoming just an ultimate driver in that price relative to anything else.
There's going to be plenty for us to talk about in the next few months as it relates to imports and production just in general. Yeah. Cattle on feed out today. And when I saw pre-report estimates for placements specifically, I know it's seasonally, right, a time when we're not placing as many cattle, but it sure was shocking. And then to get the report today and go through some of those numbers, really interesting.
Yeah, so the cattle on feed report came out. Again, it's not one of the quarterly ones that gives us the nuggets. But cattle on feed was down 2% with 10.9 million head on feed on August 1st. The inventory was 2% below the August 1 of 2024. Placements in feed yards was down, or during July totaled 1.6 million head, which is 6% below what we saw last year. So this 6 number just keeps rearing its head, 6% lower across the board, regardless of what segment of the industry. But net placements were 1.55 million head, so 1.55 million head. But placements are basically the rate at which we put into the feed yard. Marketing is the rate or the amount that we take out of the feed yard. And marketings of fed cattle during July totaled 1.75 million head, 6% again. That number just keeps sticking out below 2024. One of the things that kind of came up for cattle on feed that is kind of something that's been popping up a lot lately for me, that's kind of a hot topic, is beef on dairy. We know day olds in certain segments of the industry, day olds are sitting out there across the country in these grow yards before they go to the feed yards. And we estimate last year 5 million head of placements were beef on dairy, but they had to come from somewhere, and they're not necessarily in this data on the cattle and feed report. They're not captured there. And it was one of the things that, as I start thinking about this cattle and feed report and some of the, surprises that could be occurring, underlining is as we get tighter beef supplies, when these beef on dairy calves go from the grow yards into the feed yards, we don't know when they go, but we know that it's happening. And I think some of that is being intertwined in these cattle on feed reports. And talking with folks yesterday and today about beef on dairy, that's one of the things that kind of stood out. And the question was, why are beef on dairy not captured in cattle on feed? And that was one of the interesting questions when it came to the cattle on feed today.
When we look at a report like this and knowing we're continuing to see fewer placements, fewer cattle on feed, what does this do for pricing, thinking long-term and looking into 2026?
So I think if we think about the feeding sector altogether, and we know that there's feed yards that are not operating at an ideal capacity spot, they probably want to operate between 85 and 90% capacity, and some are probably lower. I think in the long run, if this continues, we could see some feed yards closing shop and having to shut down because they, from a pure business standpoint, cannot cover variable costs that are associated with the feeding side of things. But if we start thinking about placements going lower and lower as we keep continuing getting these reports, to me that signals as long as people are still operating those feed yards at low capacity numbers, that means there's still some demand out there for these animals. And I think that's why we're starting to see some of these feeder calf prices really run as we get into the beginning of the fall run. I think we're also going to have some type of demand probably switching within the weights. People that usually bring in heavier weighted cattle right now, they might be willing to take anything, even if it's lightweight. So I think there's, if we look at prices across the board, everything is starting to really rally at the beginning of this fall run. If you pay attention, a lot of sale barns are reporting that they're reaching all-time highs for feeder calf sales. I saw a report out of South Dakota that had 9 weights this week going for almost $3,000 a head. So it's, there's obviously demand as long as these operations are still in business, but the long run implications could be some loss of demand because there's just not enough cattle out there. We don't have the border open right now to bring cattle in from Mexico, and we know the last half of the year is a year that we bring in quite a bit.
So I have 2 questions. One, I want to get to the Mexico situation coming up. But first, you mentioned bringing in and maybe picking up lighter weight calves. Does the low price of corn right now, is that help, and does that benefit some of those guys who are maybe picking up? It's more efficient to feed those lighter weight calves at this point, or cattle at this point?
Yeah, so it's one of those deals now. I have to, full disclosure, I have to write crop comments now for the state of Tennessee. And as I do those, the price of corn and soybeans is down, and it's the cattle person in me is like, yeah, that means, feed's going to be cheap and that's good. But from a row crop producer side, it's not fun. So I think, to your point, the corn price slide is in the favor of the cattle industry right now, where feed can get cheaper. It's easier to bring in, or it can pencil out and make sense to bring in lighter weight cattle on cheaper feed. And for them, for feeders, that's probably a logical move right now versus the times when we know when price of corn gets high, demand for those heavyweights really picks up because feeders don't want to be feeding animals on high priced corn for long extended periods of time. So yes, the price of corn right now and what it looks like into the future is in favor of the cattle industry in terms of a cheaper input. So I think that's definitely one of the things that is could keep people in business longer during these times of high calf prices, because at the end of the day, a feed yard is somewhat of a motel or a hotel for cattle, and their profit margin is driven by the price of the fed cattle, the price of feeder cattle, and the commodities in order to feed those animals out. And with two of them being really high in the fed and the feeder, they probably cancel each other out, and their profit can be found by having lower or cheaper feed for those animals.
All right. I want to have a quick conversation about what's going on with Mexico. And when I say this, right, wrong, or indifferent, whether the situation, whatever you depend on, I think it's important that we have the conversation and we think about this practically, right? You mentioned there's potential feed yards could shutter because there's not cattle coming in. I'm assuming some of those are more financially stressed at this point along the southern border.
Yep.
The longer this goes on, how impactful is this to every section of that supply chain when we're thinking about the cattle industry?
Yeah, I think, we know, we've talked about it a lot where, this time of the year is when we start bringing in a lot of Mexican cattle. And we really, this is where we get, 10 to 15% of that feeder calf supply in the second half of the year comes by way of Mexico. And if we think about that, last year we shut off around November, the Friday after Thanksgiving. And so we felt the effect in the markets, obviously. But this year, as where it stands, we don't have any inkling or indication that we're going to open the border back up and bring those cattle in. So we're looking at anywhere between 10 to 15% of cattle, not being a part of the supply chain moving into next year. And if we start thinking about that, and one segment in itself being the feeder cattle, the feeder side of things in the feed yards, and we don't have 10 to 15% of supply, that drives prices up on the feeder calves here in the U.S. domestically, and probably more so in those regions of Texas and New Mexico and Arizona and those areas where there are some feeders, but then that has to work its way throughout the supply chain. And so we would see that reflected in the feeder calf side of things, the fed cattle side of things, and then ultimately with this demand that we're seeing right now at the retail level, we have a compounding effect of prices going up higher too. But we sprinkle in a tighter supply, it can be reflected in the retail side of things where we see prices go up because we don't have that 10 to 15% of feeder calf supply right now, which would ultimately drive up prices in the second quarter of next year.
Buckle up. Right. I mean, I feel like that's just kind of this isn't the cattle industry's first crazy rodeo when it comes to what's going on in terms of marketing and profitability. And it just seems like it's going to be a wild ride.
Yeah, I think because of the randomness of the border being closed or opening back up, it's almost kind of like how COVID was with the packing plants, when we'd have packing plants randomly be closed down for a day or a couple of days, and then they would open back up and it would shock the prices or shock markets. It's kind of the same thing, only they can have a larger impact right now because of the amount of animals that we bring in from Mexico, but also because ultimately the retail price will reflect the impact.
Before I let you go today, next week, there is a trade outlook coming out from USDA, from ERS. What are the things we need to watch for in terms of what's going on with trade and the data that the department is releasing?
Yeah, I think the one big thing, I was actually working on a project here with Dr. Andrew Mohammed, our trades economist, and looking at some of the proposed trade deals and what tariffs go in and at what time. I'm kind of going to be interested to see what is the ERS's take on what the landscape is currently, how they view it in terms of the trade deals, and where they think there's going to be some changes versus what they've reported in the past couple of reports, and then moving forward, what they project moving forward, what where is demand coming from, what country, and kind of where they think it's going to go. I think it's a report that it kind of stands a chance to come out and have some impact on on the markets as well. But also it could change. The report could come out and shortly after there could be another trade deal or something else that occurs, and then it ultimately it's like, well, that was a good report for a short period of time.
Charlie, it's great to see you.
Yeah, it was good to see you, and thanks for, if anyone heard a bunch of doors of people walking around, that's Cattle Vision's having a lot of business today.
Well, I'm glad that you found a home today that we could chat. Enjoy your time in Missouri.
We'll see you.
All right. To our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com. Feel free to submit questions and comments if you have them. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.